Hello and welcome everyone to Silver Asset of the Day for the 8th of April 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we get towards the end of the week here, what do you need to be aware of? Silver prices so far over the month of April, they are up 4%. So this comes back to exactly what we mentioned last week. Look out for fresh capital to come in at the start of a new quarter as we transition into April, and April is typically very strong for the metals, especially silver. So we mentioned to you in detail that you wanted to look at last week's dip. Any real pullbacks below $25 per ounce, we came all the way down to $24 per ounce as a gift for you to stack further positions. Right now, silver is trading at $25.50 per ounce. We've had a really solid bounce here in the last week. Gold, of course, has been a star here as well. We mentioned to you last week on Gold Asset of the Day that between 1680 and 1700 was a great opportunity as well for you to build positions. Right now, gold is trading at $1,755 per ounce. Over this week, we have now banked 3,500 points on commodities. We banked another 500 points today on gold and energies. We banked further profits yesterday on silver. We've had profits this week on platinum, on copper. It's been an incredible week. So I hope a lot of you have capitalized on that. Of course, for every one lot that you would be trading, that's $35,000 of profit. For every 10 lots that you would be trading, that's $350,000 of profit in just over a week. And this is what we mean by the massive opportunities that you've got currently in commodities to capitalize on as we see further infrastructure spending in the USA. More stimulus is coming. We've had this confirmed yesterday by the minutes of the FOMC statement and the IMF. Janet Yellen has been very vocal about this. This is providing a perfect backdrop here for commodity prices to go higher, particularly with the infrastructure spending that we have coming here in the USA and the green energy policies that we have coming globally. Having exposure to commodities as part of a well-diversified portfolio is absolutely obvious right now. You want to maximize on the volatility that we're seeing right now. Commodities, they don't move up in a straight line, they will zigzag, and essentially you want to make sure that you keep capitalizing on these pullbacks and trade the regular ranges and volatility that we see on these markets, which have just in a matter of 1 week delivered us 3,500 points of profit. So currently with silver having a 4% boost so far in April, so just within 1 week, and it's up 2% in fact today as well. What should we look at next year in terms of the price action moving forward? Well, typically, when you get a big move like this, it will start to get on a lot of traders' radars. We always like to be very early getting into the trade. We've been accumulating positions from the 24 level up towards 25 zone. We want to be early, then starting to book some of our profits when we're at resistance levels that we are right now. Gold's at 1755. Silver is sitting around $25.50 per ounce. We are at a bit of a decision point right now where we've taken profit off the table. We've got some exposure still running. We'll benefit if the market keeps going higher. But actually, if we were to get a pullback from these levels of resistance, I would quite like that as well, because that will enable us to add further positions. If we do continue to break out higher from here, I wouldn't FOMO in and buy right at the top of the ranges here, but if you've got exposure still, like we have, just benefit from the rest of the move here, particularly as we go into next week as well. Hedge funds and money managers, they did increase their overall net long positions on the metals in the last week, but again, just be very mindful that a lot of traders panic sold out of metals at the beginning of last week when we saw that typical end of quarter outflows, which if you're aware of the rebalancing of portfolios that happens at the end of the quarter, that would have meant that you could have stayed in your positions and not panic sold at the lows and benefited by the breakouts to the upside. In fact, I'm sure if you watch our videos at the Gold and Silver Club, you were able to capitalize on that. That gave you that additional edge and confidence to stick with positions and buy on the dips instead of most of the technical market that was panic selling out of positions. And now many technical traders are looking at the charts ready to FOMO in. So just be very mindful of that. Technical traders are getting chopped up a lot in these market conditions, and you want to make sure that you're trading the same way that the professional traders are, with an edge in this market. You want to be early into positions, take profit when others are starting to get into moves where they're getting a delayed confirmation on their technical indicators. If you understand how this works, you can use it to your advantage. massively. This is where you want to be utilizing research data, market intelligence, understanding of the daily, the weekly, the monthly, the quarterly cycles in the market, alongside the seasonal plays, macroeconomics. Understand capital flows will help you too in a big way. We've showed you plenty of examples of that in the latest week. You also want to marry this up with intermarket correlations, the ratios in the market, alongside knowing key levels of liquidity to enter into trades, but also just as important is to know when to bank your positions and take profit off the table, so you're constantly building and bricklaying your account and compounding your returns. So with that, if you would like to learn the research-driven approach to the market, join our community of successful traders and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to become a member of the Gold and Silver Club.